let's start talking about these schedules. Oh, do I want to use the slides or not? I guess. There we go. All right. So your book talks about these couple of forms that are used. So when you start a business, and if you're going to have employees, you need to have, the business needs to have its own employer identification number, EIN. Acts like a social security number for the business. All of the correspondence that they use with the IRS is going to have that number attached to it. So any tax returns that it files, whether they be income tax returns or payroll tax returns, all of that is going to have this EIN attached. Super easy to apply for these, by the way. You can do it online and it spits out the number for you immediately. So there are a lot of people that will, a lot of businesses when they start up, they don't really realize that it's pretty easy to get this EIN and they'll pay somebody to do it. I would do this for clients. They'd come in. It's super easy though. Businesses can do it on their own. People can really, it's not a complicated feat. But the form is called an SS4 form. You can still fill it out on paper if you want and send it in. I think you can fax it or you can mail it. But it's easiest just to do it online. And it's through the IRS website, just irs.gov, and you can search up SS4 and go through. Now the questions that are asked, what's the name of the business? What's the address of the business? How is it organized? So is it a sole proprietorship? Is it an LLC? Is it a partnership? Is it an S corporation? Is it a corporation? Is it a nonprofit organization? All of those types of questions. Even companies that don't, like sole proprietorships, which are companies that are owned by just one person, even if they don't have employees, oftentimes they'll choose to get an employer identification number just because it helps them to set up a bank account, a separate bank account, and then everything that you're dealing with, you're not putting your own social security number out there. So even if you're not required to get an EIN, if you have a business, you can certainly put the application in to get that EIN. So the form, like I said, it asks you the questions, how you're organized, why you're applying for it, if you're going to have employees or if you're changing ownership or, all sorts of different questions on there. But it's really just like essentially a page of questions and then another page of legalese stuff on the back. So it's not a great feat to fill one of these out, but that's the form that is filled out. Sometimes the states will use the same employer identification number. Iowa uses the same one. So if you're a business and you're filing an Iowa tax return, you still use the same federal ID number, unless you have like you have a sales tax account with the state, then you have to get a separate number from the state for that. SS5 is an application for a social security card. So this would be for an individual who does not have a social security card, like if they cannot locate their social security card and they need to get a copy. So that's on an individual basis, just kind of an FYI. So if you have like an employee who cannot locate their social security number, they can fill out an SS5 form and another one will be sent to them. There is a social security number verification service. So employers can verify up to 10 names and social security numbers, I guess, per screen. They can also upload files to verify social security numbers that they match the names in the database. So if somebody presents a social security card, you can verify that is a legitimate, that it matches the name that they're giving you on there. All right, what are you doing? Did I skip ahead? Yes, I did. Sorry. Clicked on the wrong thing. Okay, so for our purposes, we are going to be concerned with this Form 941. 941 form is the form that employers fill out to report to the IRS what they're withholding, what the total wages have been for the quarter, and what the withholding has been for the quarter. Now we're going to start out just with talking about Social Security and Medicare tax withholding, but we're going to continue on using this form in Chapter 4 because there is a spot to also report income tax that has been withheld. So this kind of acts, if you think about your own personal taxes, and I'm sure probably most of you have filled out or had somebody fill out for you a 1040, an income tax form. So during the year, you have amounts withheld from your paycheck and it gets sent off to the IRS. It's like a prepayment, right? Your withholding amounts are a prepayment. And then at the end of the year, you have to file an income tax form, a 1040, and that acts like a reconciliation. You indicate what your actual income was and what your tax should have been, what your tax liability was, and you compare it to what you've already paid. And you'll get a refund or you'll owe some additional tax. So that 1040 is really kind of like a reconciliation form. The 941 sort of acts the same way, except it is submitted on a quarterly basis by employers. So every quarter, the employer reports to the IRS how much they paid in wages, how many employees they had, how much income tax withholding they withheld from paychecks, how much they withheld in Social Security tax, Medicare tax, additional Medicare tax, and then they reconcile that with how much they've paid to them to determine whether or not an additional amount is due or if they overpaid during the quarter. But like I said, it's done on, the reporting itself is done on a quarterly basis. So you don't have that annual, you got to do this every quarter. So these forms are due the last day of the month following the quarter end. So first quarter, obviously, we've got January through March. So the last day of the month following the quarter end here is April 30th, right? Now they started out with January 31st. I'll get back to that, okay? So this is our first quarter. Second, obviously April through June, so July 31st. Third, fourth, so July through September is due October 31st. October through December, sorry, this is way over to the edge here. This is the one that's due January 31st because it's the last day of the month that follows the end of the quarter. So yes, it's due the following year, but it's pertaining to that quarter in the prior year, okay? Does that make sense? I mean, it's pretty systematic that it's always going to be the last day of the month following the end of the quarter, and that's when these 941 forms are due. As I mentioned here, and this is true of everything with regard to the IRS, every due date for the IRS falls on a weekend or a holiday, the return is due by the next business day. Now, by the return is due, what I mean is if you're mailing it in, it has to be postmarked by that date. Okay? I would always tell clients, and again, this had to do with any form with a due date to the IRS, make sure you file it, or if you're mailing it in, make sure you mail it certified so that you have proof of when you mailed it. That has come in handy on a couple of occasions with, at least with income tax clients of mine. where the IRS tried to impose a penalty, but we had proof that it was mailed on a particular date. Okay, so this is pertaining to the 941, the filing of the form, not the deposit of the money. The deposit of money has separate due dates, and you'll see that it's a little bit more complex. This is pretty simple. 4 times a year, end of the quarter. So that 941, if an employer owes $1,000 or less in employment tax for the entire year, that means they've not paid very much in wages, right? We're not talking about $1,000 in wages. We're talking about $1,000 in employment taxes, and that would be in total. So Social Security taxes that were withheld, and Social Security taxes paid by the employer. Medicare taxes withheld, Medicare taxes paid by the employer, and income taxes withheld. Those are the five taxes. Combined, $1,000 or less, they can file a special form called a 944, and it's due once a year, and it's due on January 31st. Okay, now that doesn't happen very often. Yeah. Obviously that doesn't happen very often. That would be a very small amount of income if their taxes that have been withheld are total only $1,000. There are some certain types of, and this is just kind of an FYI, that 941, there are different iterations of this form depending upon what type of income it is, and they mention here, so pensions and IRAs, they have a special form called a 945. You really don't have to worry about that. We're really just concerned for the most part about that 941 form. But there is a list, like agricultural businesses, they have a special form as well. Farms have special everything. They've got entirely, in the income tax world, they've got different schedules, different forms, all sorts of special rules for them. Sometimes it's advantageous, sometimes not. All right. Questions about the due dates for filing the 941. And we're gonna go through and talk about how that 941 is filled out, because you've got some of your homework is filling out 941. Okay? Any questions though about the schedule, about when it needs to be filed? Okay. Now, again, that's just the filing of it. There's a different schedule for depositing the actual funds. So the employer has withheld the money. They have to then send it off to the IRS. When do they do that? Employers need to know what their deadline is for sending off that money. Well, the answer is it depends. The more the employer owes in employment taxes, payroll taxes, the faster the IRS wants their money. Just like the rest of us, right? Somebody owes you $10, you're not going to be too terribly anxious about getting that money back. They owe you $10,000, you're going to be a little bit more anxious about getting that money, right? So the IRS is the same. They're just like us. So the more, like I said, the faster, the more you owe, the faster they want that money. So I'm actually going to come back to this. I'm going to go to a separate. Oh, I thought this was going to be a little bit more. I'm going to do this instead. I'm going to go back to my slide. And I noticed I had a mistake on it, so I'll point that out to you. Okay, so here's our deposit schedules. Again, that annual depositor, I put $2,500. It should actually be $1,000. I'll change that, but just as an FYI. That's for the year. If the employer owes less than $2,500 for the quarter, then they can pay on a quarterly basis, and they can pay it with their 941. So that same schedule would apply. But that's only if they owe a total of less than $2,500. Once they owe $2,500, now they got to pay more frequently. If they owe between $2,500 and $50,000 for the year, we're talking about for the year, and I'm going to get to how we determine that in just a minute. For the year, then they have to pay on a monthly basis. And that monthly due date is the 15th of the following month. So if they are paying on a monthly basis, that means that for January, they have to pay by February 15th. Oops, what the heck is that? Unless that's a weekend or a holiday, in which case they can pay the next business day. So January. So August, they would have to pay by September 15th. And they have to make that deposit of the amounts that they collected and that they owe during that month. Okay, so during the month of August, we had payrolls. Maybe we're semi-monthly payer. We had 2 payrolls. We collected income taxes and Social Security and Medicare taxes from those paychecks during the month of August. We have to calculate how much we withheld, and then by September 15th, we have to send that money off to the IRS. It's not our money. That would be the amounts that we withheld and the amount that the company owes. Right? And that is if during the year we owe between $2,500 and $50,000. I'll tell you in just a minute how we determine that during the year. So you can see, as I said, using this look back, I'll talk about what that look back is. If we owe between $50,000, or actually if we owe more than $50,000 in those payroll taxes during the year, then we are called what's called a semi-weekly depositor. Now this name is kind of funny. It makes it sound like you have to make a deposit twice a week. That is not the case. It means that there are 2 days during the week that the IRS accepts deposits. Those days are Wednesdays and Fridays. So, and this is the one that confuses students the most, okay? This semi-weekly. If I pay, and again, this is if I have owed over $50,000 during the year, if my pay date is Wednesday, Thursday, or Friday, I am going to deposit the following Wednesday. So, what is today? No, it's not a good example, Tuesday. Let's say it was Friday, and we have payday today, and the employer's collecting income taxes from employee paychecks, Social Security taxes, Medicare taxes, and calculating how much they owe of the Social Security and Medicare taxes. And it's Friday payday. That means that next Wednesday, they have to make that deposit. If the payday is Saturday, Sunday, Monday, or Tuesday, that's today. If we get paid today, then we have to deposit the following Friday. Well, I should say the next Friday. This Friday. Whatever the next Friday is, right?
It would be the same week.
It would be the same week. Exactly. Exactly. So whatever that next Friday is. And in this case, whatever that next Wednesday is. How I remember this, because it's a little confusing. Okay, what's our pay date? What's our deposit date? Wednesday and Wednesday. Okay? Wednesday, Thursday, Friday, Wednesday. Just remember that starts with a Wednesday, it's the next Wednesday. You got a week to deposit it. Saturday, Sunday, Monday, Tuesday is gonna be the Friday one. That one you're just gonna have to remember that. Okay, questions so far? I'm not done, by the way, but does that make sense? So again, this is called a semi-weekly deposit schedule. Not because we're making 2 deposits, but because the IRS is receiving deposits on 2 days during the week. Now there is another pay schedule, and this is for businesses that accumulate or that have over $100,000 of payroll tax liability during one particular pay period. Sounds like a lot, but if you think about big companies, you know, DMAC probably has $100,000, way more than $100,000. The Amazons, the Walmarts, all of those companies out there. If you've accumulated over $100,000 of payroll tax liability on a pay period, you've got to deposit it by the end of the next day. So pay period is today, Tuesday. We have $110,000 of payroll taxes that are sitting there that we've withheld and that we owe. We got to deposit it by the end of the day tomorrow. So the more you owe, the faster they want their money, right? There are a lot of companies. So even though those companies that have a next day obligation may be semi-weekly depositors, because in that single pay period, they have more than $100,000 of liability, they're going to have to deposit it the next day. So you can be a quarterly depositor. Well, you're not going to be a quarterly depositor for long, and I'll tell you why in just a minute. So you could be a quarterly depositor and then pay a bunch of bonuses, like the end of the year, pay a bunch of bonuses in December. And so you've accumulated these taxes in this one pay period, and you got to make that deposit the next day, but then go back to your regular schedule because the next pay period isn't over $100,000. So that $100,000 is only on a per pay period basis. And again, those are the taxes that I'm talking about that have been withheld and that the employer owes, not the payroll itself. Okay? So $100,000 of liability for a payroll, I mean, we're talking about, you know, over $1 million in payroll during that particular period. Now, how can we tell what schedule we should use? We can't look into the future, right? And see, oh, we're gonna owe $50,000, $60,000 this year. What the IRS does is they have this, what's called a look back period. The IRS tells you what your schedule is. Everybody starts out as a monthly scheduled depositor. So it doesn't matter how much you're gonna owe, even if you don't think you're gonna owe much. At the beginning, you start as a monthly scheduled depositor, which means you're gonna have to deposit every month by the 15th of the month following that month, right? So once you have accumulated, though, a history of deposits for the amounts, then what the IRS does is they look back at your deposits, and then every year they determine how frequently you're going to make those deposits. That's the look back period. The look back period extends from July 1st to June 30th. So it's going to start July 1st to June 30th. The IRS is going to look back at your deposits during that time. If your deposits were under $2,500 a quarter, you're going to be a quarterly depositor. If your deposits were over $50,000 during that period, you're going to be a semi-weekly depositor. They're going to tell you what your status is in November. They send out notices to all businesses in November and tell them how frequently they're going to deposit. Okay? Now, even if the company had a next day requirement, maybe every pay period they had a next day requirement, they're still going to be classified as a semi-weekly depositor. Okay, but they're going to have to, if in those single pay periods, if they have accumulate over $100,000 of liability, they're going to have to pay it by the next day. Okay. Questions? Any questions? Does that make sense? You sure? I'm just that good? So again, the most complex part is this semi-weekly, and you can see why, because it's going to depend on the day that you actually pay. When we look at the 941, you're going to see how that factors in. When we look in particular at the Schedule B on the 941. Excuse me. No? You're joking, right?